Hey, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. I'm here every single day, Monday through Friday, to help you become a successful Forex trader, to be a guide, to answer questions, to share my experiences, and hopefully earn your loyalty and respect. 7:30 a.m. Monday through Friday, baby. Let's go to the charts. First of all, any questions right off the bat? Great. So, good morning, Chris. Coffee. Blah. All right, so here we go. Mexican peso still moving in our direction based on the fundamental trade. Everything just moving right along. Running into some monthly support, however. Now, normally, you would say to yourself, well, it should have some room to head down to at least M1, conservative target. Sure, I get that. The only thing is maybe not in July. In July, I've been trying to tell you to tighten up your expectations. Why not? Why not at least take some of the profit at support 1 instead of M1? That would be. Is my shoulder out of joint? I'm like, I think I need a massage. I think my. See, I do that and it's not level. Weird. All right. So, anyways, good enough, right? There's the conservative target. Tighten it up. Less expectations for the month of July. You can see it's already responding quite well or quite quickly off of that support level. So even if you didn't do it, it's still something that you should have in mind because you're going to be trading Forex for years and years and years and years and years. What I tried to prepare you for in June was tightening up your expectations for July. Then coming back July after summer school, that was the first message again. Hey, be conservative. Trade by session, not necessarily by week. Be happy with what you got, all that kind of stuff. Yeah. So that's actually quite a nice move off the first month. And so again, typically you would be going for down here, but support is support is support, isn't it? Okay. Okay. Amazing, right? See how the 3A2 impacted this? Yesterday wasn't even a pivot. I think we need a little slightly darker color, don't we, than lavender. Bisque? Nah. Light gray. There we go. Gorgeous. Here's yesterday's move, right? You see how it was just perfect. Yeah, but only for 12 hours. Okay. So now you're in this really tricky spot. Do you want to play it north or take it down? Well, what's my message to you? Conservative. So, yeah, I don't know. Be careful. Look at all these role reversals and stuff. Isn't that just gorgeous? Now, you might have had it this way instead. It shouldn't have impacted you one way or the other if you had it this way. Okay? So these are monthly pivots. Maybe you're playing weekly pivots or something like that, which is fine. So we're going to lose the analysis here, but it's okay. So find a way. Don't trade an anchor. I heard it say. Okay. Same kind of dilly-dip, right? Can you see the inverse head and shoulders? You know what, I'll just draw it. Kind of like that. Okay. It's an amazing coincidence that this reversal pattern happened at a monthly pivot up. Well, Cream's making the decision to take this downtown, and that's fine because just by definition, if it fails to make a higher high, then it's still bearish, right? So, as a reminder, our prediction, I believe, you can't see it here, but I believe our prediction was the bottom was going to be pretty close to 1997. Sorry, 1197. Sorry, right? Right? James says Fed leaning more neutral. You know, in my humble opinion, they're just they have been neutral. So anyways, wouldn't it be interesting if that's all that happens? Right? Right, Kareem. And what Kareem says the Fed doesn't want a super strong dollar, so they talk it into sort of a neutral stance. But why would they not want a strong dollar? Don't say exports. Exports are a consequence of the answer. Trade balance, same thing. Trade balance is just imports, exports. Raise rates, slow the economy. But why? You guys are giving me symptoms, not reasons. Consumer spending, symptom. Better economy. Inflation. You're getting closer to it, yes. In this case, talking about jacking up interest rates could strengthen the dollar. Strengthening the dollar creates deflation. That's the answer that I'm looking for. So if raising rates creates deflation and the goal of the Fed is to create inflation, they're contradictory. So it's difficult. So I think they're going to raise interest rates to like 2%, let's say. I'll just pick a number. It'll take a while, but we'll get there. And then I think what they will do is not raise interest rates, but they'll start clearing off the balance sheet. So they'll raise interest rates without saying they're raising interest rates. Okay? What they'll do is they'll dump it not on the short end of the yield curve, but in the middle, or right? What happens to the yield curve? Well, let's say interest rates are near zero and they go up like this. So let's draw this properly. This is yield. This is time. Okay? 1 year, 30 year. 1%, 5%. Okay? So let's say our yield curve looks like this. During the financial crisis, it looked more like this. This was basically zero and flatter. I know you can't see that, but I'm just trying to indicate that maybe rates are changing a little bit. And what the Fed will do once they stop raising interest rates on the short end here, what they might do is start selling bonds, raising prices, or sorry, selling bonds, lowering prices, raising yield. So maybe this part of the curve stays the same, because if they're selling, let's say, 10-year, 15-year, and 20-year bonds, then maybe you get this. Yeah, not inverted, John, the other way. So like interest rates, so what I'm trying to highlight here is interest rates on the low end of the yield curve stay about the same, but maybe these ones go longer. Now this is desirable, right? Why is that desirable? Nuno's got it. Because if you've loaned the government or a corporation money for 10 years, you deserve some sort of return for the risk that you took relative to a risk-free investment like, let's say, a U.S. Treasury. Like a 90-day T-bill or something is risk-free by definition. So a 10-year, that's loaning money to the government for 90 days. It should be risk-free. So loaning a corporation money for 10 years should pay a lot more money, right? And then, of course, making a 30-year loan, let's say buying a 30-year government bond, should pay significantly more than a 90-day, right? 30 years. Because look at all the different risks you face for over the course of 30 years. So this is actually desirable, because think of it this way. Retired America, and we're talking now baby boomers, they have their money locked up, and ideally they're earning a pretty penny, because they're going to be on this side, right? Long-term, risk-averse, conservative investors should still receive a high return, right? So having this go up is advantageous because, you know, you're basically paying money to the retirement community. Bond funds holding their money, but nonetheless, right? So this is actually desirable. Think of it this way. What if it was super cheap to borrow money as a corporation? And if you were the one lending money to corporations and government, on the long run, you earned a good return. So money is cheap to borrow, and you get a nice return for taking conservative investments by, you know, recycling the money back into the economy. So it's actually a fairly good thing if they do it right. Okay? And some of you know my story, that when I got out of California with a newborn baby, I mean absolutely newborn, and a little toddler, packed up my wife and kids and moved to the other side of the United States because I believed the economy was going to crash, first and foremost with real estate. It's a pretty big trade, man, putting your life on the line. And at that time, the yield curve looked like this. Look at the difference. What does that mean? It means it costs more money, right? It costs more to borrow money for 90 days than a 30-year investment. What? So you're a business person, not a businessman. I'm a businessman. Let me do my business. Damn. Right? So you're a business person. You need to borrow money for 90 days for like inventory, cash flow, all these normal things. But it costs you more money than a 30-year investment would return. It's hard to be in business and earn a profit when the cost of money is prohibitively expensive. Put it this way, what if you had an 8% more margin, but it costs 6% to borrow money for less than a year? Like for 90 days, it costs you 6%. You're like, that's almost all my profit. But you have to have the cash flow. But what if you needed like to expand and build a new building? And now you need a 15-year, right, loan. And they're like, 15-year, oh, it's going to cost you 10%. You're like, 10%? I only have 8% margins in my whole business. Well, I guess you're not going to expand. And that's what happens. Or you expand, but you try to cut corners, so maybe you lay some people off and just try to get through it or whatever. But that's when the business cycle starts heading south. So I can tell you within a year, as the unpredictable great financial recession, I mean, that was so ridiculously easy to predict that I think it's negligence that professionals didn't. So, anyways, common sense. Remember that? I think what it is, we were talking about Canada the other day being ultra conservative and not really even being in the financial crisis. Maybe Canadians are not ripper smart, but we have a ton of common sense. I think it's just from growing up on a farm or something. Even if you didn't grow up on a farm, it's fun to tell people that. So we were How about Bank of Canada? What happened there? Yeah. So, but we were talking about this, I think yesterday, wasn't it, Ryan, where I'm like, hey, you might think there's no reason for them to raise interest rates. Oh, 2 days ago? You might think there's no reason at all. But Canada's different. They're conservative. They don't want rampant inflation. They don't want crazy risk-taking. They don't want all these things. And so all we were talking about is two things. One, get to know your central banks, right? And two, never think about what you would do if you were the bank, really. It's better to know the player. So, like, you know, people, and I just took a philosophy class. I'm a Harvard-educated philosopher. So you shouldn't ever do things like, stereotype men for being more in tune to sports and athletes than women. But I'm going to take that giant leap of faith. Anyways, some men really know every single individual player on their team, or even in an entire league, whether it's football, or as they say in Europe, football, or baseball, or hockey, or whatever your thing is. They know every single player, right? Not just on the team, but and their stats, but even their personality. And really, you need to be the same way if you're an economist, especially one that actually trades. You need to know those individual players. Who are the players? How does Pelosi look at the world? What's Pelosi going to do in this situation, right? Versus, Australia. We talked about comparing Australia. Australia is also a first mover. After the financial crisis, Australia was the first mover back into raising interest rates. Now, maybe it was too early, but they're a first mover bank. You should know that. And they're also very interesting because they like predictability. Canada doesn't care about the predictability so much, so they're just going to do it and then freeze, right? Australia will do like every other meeting. Now, they won't tell you, but if Australia raises interest rates, I can announce now, today, that they may continue, not the next month, the month after, and then not the month after that, but the month after that. And it's just like that's how the Aussies handle it. So on and so forth, right? So whatever, got lucky there. But you got to know the personalities. Okay? Right? So learning fundamentals is the first step so that you understand what they're doing. Then the next thing is don't put yourself in the place. Just get to know the just real decision makers, right? Yeah, I don't know, Dre. Don't know. All right. So what are you going to do? Okay. So can you see how when I first started trading I started to look at, like, at first it was the 2060. Now it's the 2155. Right? Only because they're fib numbers, but for a couple of years at least, I traded the 2060 with just as much accuracy. But this whole idea of catching trends, it's very interesting, right? Like if you had just played the moving averages between, let's say the beginning of June, it's really not that difficult, right? Can you see some of these trades? See, like up in here, that's a perfect bearish swing. Right? You see how if you fib this is what, 382, 50%, 618 kind of thing. No real reason to have ever gotten out. Look how they reset over here off the 21, another one off the 21, again, right, off of these areas. Could have been short. Or James, you've already been short for 2 months. Yeah. Oh, hey. What's this about the cognitive bias and behavioral finance? So Joe's writing a paper, behavioral finance, okay, about the cognitive biases, trend following. Versus, all right. Yeah, well, make sure you put the counterpoints in there because there's a lot of downside as well to that kind of stuff. And I don't think you can really discuss in a paper trend following without discussing turtle traders, because they're the most famous in trend following systems. But I also think it was a dumb, stupid system that they were using anyways. And some people use such systems to cover up the fact that they have no risk management skills. Right? They're like, oh, well, it's a long-term trade. I don't, So like the turtle traders, they would do things like watch a position fall for like 2 years. Like, what are you talking about? But anyways, good job, James, on being short something a couple of months. That's very encouraging. Okay, yeah, so Joe, okay, then that's better. Or another way of looking at it, Joe, is that you can combine technical with fundamental analysis. But, well, yeah, you're right, Joe. Or I mean, James, yeah. But the only problem is in a lot of circles, and probably academia, because they're the slowest, they find technical analysis fundamental. Right. But you're talking about behavioral finance. Technical analysis is very much behavioral finance. Because when you're looking at a chart, you're not, let's say you're doing technical analysis of Apple, and you're selling Apple stocks based on charts. You're not looking at their profit margins. You're not looking at same-store sales. You're not looking at iTunes download numbers. You're looking at price. And the reason you're looking at price is to discern where other people are going to act, aka behave. You're looking at patterns in behavior. Which represent greed and fear. So, again, if your professors don't like technicals, depends on what kind of fight you want to get in. You could argue that it is technical analysis is behavioral finance. So anyways, going back to this, we have a yellow here. Now bear in mind, I guess it was Monday, we were talking about this actually being a buy zone. Right? The next sell zones would be this yellow area. But at that time, and I can't even remember why, I thought this was a better sell zone. So I guess because this was a buy, the thought was it needed a head up before it came down. So it was down here, like up. Buy it at 44, sell in at 46, I think is where it was. Well, James, I suppose James's individual behavior or market behavior, and really it's essentially it's both, isn't it? So anyways, guys, I think right now we're in this weird place. If you're a bull, like you were at 44, you need to buy it at 45, and you're assuming you're heading back toward 50. If you're a bear, wait for it to get back to 46 and then maybe dump it there. Capiche? Because you're going to have to play this if you're a bear. So the oil report yesterday showed that OPEC is losing control. Not only are like Libya and Nigeria pumping oil big time, but OPEC countries are actually producing more. So the cartel's falling apart where it looks like people are not sticking to their promises. What a shocker. So I think a year ago, roughly, we were talking about how cartels work and why I would bet against such a situation like an OPEC deal. Not that I don't believe in OPEC, but just that you can't get that many people with that much risk on the line to not cheat. So it goes back to game theory, right? So just based on the fundamentals of game theory, the system is rigged in such a way that everyone has an incentive to cheat. So at least one person's going to cheat. And if they all cheat based on the laws of reciprocity, then everyone's going to cheat. So whatever. So I think on the long run I'm still short, but you still have to know where to sell. Gorgeous. Breakout, pull back, breakout, pull back, breakout, pull back. Is that funny? So it looks like I have this marked on Monday that there's two places to buy, either here or here. Am I remembering that correct? Is it? Anybody? Anybody remember that? No? I'm not entirely certain as why I'm saying it, but I can see my notes, right? Because you know, you got to see my standard operating procedure. Right? My standard operating procedure is to find the next two levels in which I might do something. So I could see it here, like you'd buy it here, or you'd buy it off the roll reversal. Right? This yellow zone is where a bear would have sold it earlier in the week. This looks Oscar Mike, doesn't it? So I think this is a pretty interesting area, huh? So one thing I do remember is that we had this as a sell zone weeks ago, actually months ago, maybe even a year ago, but this was certainly a place to be ready to sell, right? I know you might say, oh, this is Grandma Yellen testimony and stuff like that, but is it? Well, Dre, it's not only weekly resistance. This is the famous no-fly zone, right, to sell it at 115. I mean, this has been our no-fly zone for over a year, I think. Right? Would anybody agree with that? That this 115 area is something that we've been discussing not just this week or last month, but literally a year ago. So is this really surprising? And my argument would be no. So pretty amazing that we touched it and started getting behavior like this, right? Okay. Now I don't think it'll actually move like this blue line. What it needs to do, okay, is now we need a correction and then an extension. So we're probably in correction mode, but not reversal mode. So don't be shocked if we even double top here. Okay. Ideally, we stay below this. Okay. But sometimes you have to show the world the double top before they're on the clue train. It went higher than Joe thought. Well, on Monday, because of the swing, we have it that there's a possibility that it moves this way. Okay, but I believe I said I'd rather it be up here because that is our long term, right? But it could have fallen here because there was sort of a modern double top. But this is the real deal up here. in multiple ways: weekly, monthly, and it's probably a yearly pivot. I mean, it's the no-fly zone. What's up, Douglas? Boom. Yeah. Although I'm worried, I look like I'm sitting in my chair crooked. Yeah. Well, look like I'm sitting crooked. I think I need a massage. Life is great. Life is grand. Life is good. Yeah, Thai massage. Are you going on? When was the last time I was on a vacation? I think it was my honeymoon. Yeah. Yeah. Who can afford a vacation? If I go out of town, I work. Peso we did, CAD we did, oil we did, dollar we did, pound. I think we might have. Oh, Kiwi. So I had this heading up earlier in the week based off of this pivot cluster. Okay. The second buy zone was lower, which it did hit and head up. Great. So now I would assume a retracement, not necessarily collapse. Okay. But look what I drew. Isn't that crazy? I have it going up, and this was on Monday or Tuesday. I think it was Monday. I have Kiwi Yen going up so it can fall. So I'm profitable now, so I'm going to move my stop. Well, at least, how about here? But that's kooky, isn't it? And it did go up. So now we'll find out. You can see I'm long right above the pivot cluster. But look at the accuracy here, guys. I drew this on Monday. I have it going to, and I drew it quickly, right? I just threw it out there. But I have it going to 83.28. And it's exactly 83.28. Look at the pivot. So, yeah, it's not necessarily the trend line. Just, okay, back to the 1 minute chart here. Look at that accuracy. 83, is it 28 or 26? I can't even see. I guess it's 26. 83.26. What an amazing coincidence, huh? Do you remember when you traded without pivot points? It's more like, Peter, the off chance that I'm wrong, I want it to go up, right? I want it to go up. Right. I know what you're saying, but it's a mentality issue here. I don't need these pips. And I know I'm early, so there's an argument to it. There's no doubt. But somewhere in the next 8 weeks, I'm going to start building a portfolio, which means I'm kind of a little bit doing it now. So yeah, I'm picking the direction for the let it run. Because there's an outside chance that this just keeps going up. Now, I know based on seasonality and other kind of experience, this is a time for the yen to get strong. I get it. I guess one way you could look at it is between now and August, I can try to buy these dips and then manage the risk per trade. So let me see if I can do this drawing. Let's say over the next 8 weeks, this does roll down and we start seeing stuff like this, right? One thing I can try, since bear in mind, like this time of year, like January or July, I don't so I'm telling you to be conservative and make the money when you can. Another way I look at it is I don't even try to make money in July because it's so little. Like, who cares, right? So another way of trading it is finding this area and buying it and managing the risk on that trade. And if it falls, do it here. Let it go up, and if it collapses, fine. Then my job here might be middle of August now. Okay? Here we are at the end of August, and then all of a sudden you got it. Okay? And these little moves here for profit, yeah, I could do it. I could take profit here, but then I'm not in a position. And what did I make? 25 pips, 30 pips? Who cares? Same thing here. Maybe it goes up 50. Maybe this goes up 200. Well, then it's getting more and more interesting. All right? So I'm sort of in this game right now, and I know it's early. I know it's early. But I think the way to get filthy, stinking rich, and I've done videos on this before, so they ain't no secret. I think the way to get filthy, stinking rich trading Forex is never taking profit. Because I think most of you guys have tried the other way. 25 scalps a day, in the long run, doesn't get you filthy, stinking rich. If you're good, you can make some money. But what do you do when you're like, man, I want to go on vacation for a week? Well, now now you're not making money. You're spending money and you're not making money. You're like, I got to get back to my chart so I can make money. It's all income based and not wealth generating because you don't actually own things, right? It's like tap dancing for a living. You got to be out on the street tap dancing and tourists throw you money. You got to keep going. And as soon as you stop tap dancing, you're not making any money. Versus like owning a portfolio of real estate. You wake up in the morning, you're like, damn, I made $100,000 today. I think I'll go back to bed. Right? Because now you actually own something. It's not a service that you do. So scalping is like a service, right? Service. You're like a plumber. How many calls did you do today? I did 6, but if I work late, I could do 8. Okay? So, certain scalping and spot trading and stuff, those are service-based income generating systems, which are fine, but it's not wealth. There isn't anything you own. So, let's say by Halloween, the end of October, what if I'll throw out a number. Instead of scalping every day where you're throwing down $100,000 lots, making 25 pips, so you made $250, great. You do that 4 times a day. It's $1,000 a day. Look, it's real money, right? But what if by October, instead of doing that, making $1,000 a day, assuming that you're profitable a lot, what if I held a $10 million position and all the end pairs are going up? Okay? But it took me 3 or 4 months to do it. But I'm earning interest payments, right? But that's a lot of trades now. Maybe 10 million is too much. So 10 trades is $1 million. Well, let's do it that way. So scenario 1, the markets are moving really well starting the end of August. So September and October, 8 straight weeks of great trading. Typically, you're trading 1 standard lot. You're making 4 or 5 trades a day, and you're averaging about $1,000 a day because the markets are good. There's an obvious trend. You're throwing down trades. You're picking up 25 pips like nobody's business because it's kicking off pivots, kicking off cycle levels, 25 pips at a time. So you're trading 1 hour and 15-minute charts. Boom, $1,000 a day, 20 grand a month. Everything's good, right? Or over the course of that time, I bought 10 positions at 100,000 each, and instead of taking the 25 pips, I moved my stop to break even. So after the course of 8 weeks, now bear in mind that the market's trading very well, all the end pairs are going up, but instead of taking the $1,000 a day, I just jammed my stop at break even. So now it's October 31st, and I have 10 open positions. Okay, the other system made $1,000 a day. So let's say November 1st, another typical day, the average yen pair went up 100 pips. Well, I got 100 pips. Well, doing it the old way, you got 4 trades making 25 pips. So you made your 100 pips, right? However, I have 10 trades open. It went up 100 pips today. I didn't do anything because the 10 positions were opened up like a week ago. But yet again, another good day, moving in the direction of the overall trend. My 10 trades are up 100 pips. I made 1,000 pips that day. And you're like, boom, I just made $10,000 today, plus interest. Now your scalping didn't earn any interest. And every day you're making $1,000, but you have to work every day, take the risk. You're sitting there for hours versus a portfolio position that moved up, and all of a sudden you're like, 10 grand, boom, back to bed. Or you're out there fishing with your kids, right? Someone says, hey, how's it going? You're like, oh man, I made 1,000 pips today. Well, how about the fish? Not a bite. It's been great. Right? So, I don't know, income versus wealth, guys. So, look, a trade like this, yeah, I'll probably not keep it, but I'm not going to get out of it either, right? So, I don't know. It's just the cost of doing business, I think. Okay? So, I know I'm weeks early, but what if the market moves early this year, unusually early? Because this year is a little different because of Trump or something. So I don't know. So it's just I'm doing my job, trying to get in half decent trades, controlling the risk. I'm probably early on this one. I'm probably early on the next one. Right? But it's like Swamp Castle, right? The third one. burned, and then fell into the swamp. But the fourth one held, right? Huge tracts of land. Son, one day, all of this will be yours. What? The curtains? Yeah, no. So, yeah, sorry for the Holy Grail. It just can't be helped. So that's it. That's the idea. So maybe I'm not even taking my own advice. How about this? I'm not shooting at rabbits, but I'm not hunting for big game. Well, I guess I am hunting for big game, but I saved food in preparation for this. Okay, I've been saving and preparing so that in the lean months, while other people are shooting at rabbits because they don't have any other food, I am going on the long hunt. But I have rations, right? So I was able to do it because I had prepared. But most traders haven't prepared, right? You got to eat. I'm good. So someone's got to go out and get that moose. Might as well be me. Yeah, enough analogies for today. Hey, I hope you get filthy, stinking rich trading Forex, and then you thank me. And you do that by donating enough money to a local hospital where they build like a children's cancer ward, and you name it the Wayne McDonell Children's Cancer Ward, and that'll be thanks enough. But anyways, peace on earth, may the pips be with you, may your profits be above average. See you tomorrow. Namaste.